Now, this could be trouble. There's 50 seconds to go before the opening bell, so I've got to sit here and tap dance. I've got to give you the backdrop to today's...
Well, there's 5 seconds.
Oh, there I'm used up 10, 15 seconds already, just like that. Seriously, the backdrop is this. Signs of flexibility on tariffs. Maybe Gary Cohn doesn't completely walk away from the Trump administration. Interest rates holding relatively steady, below 2.9% on the 10-year Treasury. We've got a very strong jobs report yesterday, another one coming tomorrow, and the jobs report this morning shows that that employers are most unwilling to fire or lay off their employees. That is the backdrop. A strong economy and maybe some give on the issue of tariffs. There you hear it. That's the opening bell. It's ringing. When it stops ringing, like now, we're off and we're running, and here we go. Ignore that minus 82 and look at that one instead. We're up 50 points in the very, very early going. I don't see all the Dow 30 stocks opening at this point, frankly. Maybe we've got something wrong with that indicator. But look, we're off, we're running, and we're... Wall Street professionals, as Charles pointed out yesterday, Wall Street pros tend to use the S&P rather than the Dow. It's a better indicator. And it's up about 1/4%. The Nasdaq up over 1/3 of 1%, indicating to me that the technology stocks are doing very nicely. Thank you very much. The 10-year yield, where is it? 2.88%, I think it is. There you have it, 2.88. That's a long way from the 3%, which apparently threatened the stock market a couple of weeks ago. 2.88 right now. The health insurer Cigna is buying the pharmacy benefit manager Express Scripts, $67 billion. Looks like one-stop healthcare is on its way. More on that in a moment. Cigna is way down. Express Scripts is up. Look at this one. Citi says Apple's going to sell far fewer iPhone 10s. It originally said they'd sell 27 million in the first quarter. Now they say it's 14 million. I don't know why, but the stock is not reacting negatively. You would have thought, wouldn't you?
Yeah.
Amazon, where's it opened? I'll tell you now, that is an all-time high. I think it was just a fraction higher than that a second ago. President Trump appears to be willing to work with Canada and Mexico on tariffs. That's the principal trade and political backdrop to today's trading. Ashley is here, Liz is here, Scott Martin's here, and David Dietz as well. Scott, to you first. If there's some flexibility on trade, carve-outs for Canada and or Mexico, is that what's propelling this market up today?
Yeah, I think it's the messaging, Stuart, of the fact that Trump is talking tough. He's bringing a big deal to the table, but willing to negotiate down the terms. And I think that's something that you saw reacting differently in the market, say, the last couple of days, which was, oh, my goodness, this Trump is serious. This is going to start this big trade war, and he's not going to budge on some of these principles. Well, now the reality appears to be coming clear that he's talking tough, but also willing to come to the table to talk about a deal. And so when you see the market's relief rally, so to speak, because of the fact that we're going to work something out with two big trading partners, that's what the S&P 500 likes to see.
It's a negotiating tool. You know, let's face it, that's how he operates. He's a New York real estate guy. He shoots high and then comes in somewhere below. But bear in mind that U.S., steel and aluminum account for 1.6% of U.S. imports. It's a tiny fraction. The fear, of course, is that it's going to be broadened out into other areas. But let's keep perspective.
But if you keep negotiating and you've got carve-outs, it's not the same as a trade war. It's just not. Now, I've got news on China, really extraordinary stuff. Their exports jumped a whopping 44% in February. That's the biggest monthly jump in 3 years. That news comes right in the middle of this contentious trade dispute and this trade problem we've got here. Doesn't it show you, David Dietz, that America is, in fact, getting messed with on trade by China?
You know, we're all about free trade, but we want it to be fair trade. So I think at this point you have to show that somehow the U.S. consumers who are buying all these Chinese goods feel they're really being cheated. I admit that it's not good for those who are trying to compete with China, but, it begs the question, are their costs too high? Are their unions too strong?
Well, it suggests that the big trade clash comes with China a couple of weeks down the road. That's what it implies to me, at least. Anyway, we shall see. Now then, February jobs report out tomorrow. If it's very, very strong, like more than 200,000 new jobs, if wage increases are picking up the pace, is that good news for stocks? Scott Martin.
Initially, no. and that's what we've seen lately. It's kind of disappointing. I mean, We've seen good economic numbers push stocks down because of this fear that the Fed's going to continue on this interest rate hiking cycle, that interest rates themselves are going to go up in response. And so, Stuart, you should take stock in the fact that the economy is getting better, wages are growing, but the initial reaction for stocks may be rather poor.
Okay, can I just give some comfort? Because this is a really fascinating phenomenon that's going on in the buy the dip action. When the market is going down, the 10% correction we had recently, watch this. Goldman Sachs corporate stock buyback desk had a record historic day. So companies are stepping in, buying back their stock on the dip. So are they using their tax cut benefits to buy back their own stock? So that's what is helping to put a floor under the market on these downdraft days.
Fair point.
And the other point, too, is Apple could easily hit $1 trillion just on buybacks. When they do buybacks, that EPS number looks better. So their stock buyback plan could propel it higher.
We'll get to it in a second, but I don't understand why Apple is up this morning when they're going to... Citi says they'll only sell half the iPhone 10s that they were supposed to. That's interesting. This is a big story. Health insurer Cigna buying Express Scripts, $67 billion. This is, Lizzie, this is all about one-stop healthcare shopping and the Amazon effect.
And we have not seen such rapid consolidation in the healthcare sector, I don't think, in a long time. So there's a big shakeout going on. And you wonder if Express Scripts, we talked about it just a few minutes ago, sold at the top smartly, a smart move, because they're being in the crosshairs right now by the Trump administration for gouging customers, for pocketing rebates, for keeping drug prices high. So this is also the Amazon, J.P. Morgan Chase, Berkshire Hathaway effect, right? Their nonprofit joint venture in health.
Look at the bottom right-hand corner of your screen. We're up 142 points as we speak. Now, that's some bounce back. I have to believe that the flexibility on tariffs and trade, that may be the reason for this particular rally first thing this morning. You with me on that, David?
Yeah, absolutely. I mean, remember, Canada and Mexico are our biggest steel suppliers, so this really kind of guts the tariffs insofar as steel is concerned.
3:30 this afternoon, the announcement comes, and that's been promoted. Okay. Now, it's a meeting. I'm sorry. It's a meeting. Let's get that clear. Now then, we've got Citi. This is the Apple story, and I don't understand it. Citi downgrades Apple's sales rate for the iPhone 10. They said they were going to sell 27 million. Now they say they'll sell 14 million. David Dietz, why on earth is the stock up?
Well, I don't think the Citi news is new news. I can tell you with first-hand experience, I lost my old iPhone. I traded up to the iPhone 10 and have been very disappointed. I don't think it's worth $1,000. So there you go.
Well, there you go, indeed. Hey, Scott Martin, why is Apple up when the forecast for its i10 sales are down?
Well, you know, it's funny. David's right. The news is already in the stock. I mean, rumors of the iPhone 10's death have been circulating for weeks now. Maybe it's just a relief, Stuart, that they're going to sell any of these phones, because I agree with David. I switched up to one and switched back to my iPhone 7 because I didn't like the phone.
Whoa.
Yeah, in fact,
I've heard that before.
I think Pepper Jaffrey found that 4 out of 10 people hold on to their older phones.
I got an iPhone 10. I like it, but I don't think, to David's point, it's not worth $1,000.
Well, I've got an iPhone 10.
I would trade back too. I just don't want to admit I was wrong.
The elitist with the British accent from Connecticut. Ladies, my case rests. Okay. Sorry, actually. My thanks to you for all the hard work you
my
did away, by the way. Check that big board. This is a rally. We're up 120, 130 points. 24.9 is where we are. Costco, their profit and sales fell short, is facing stiff competition from Amazon and Walmart. That thing is down $3. That's 1.7%. Better sales at Kroger, but it's looking down the road, and it doesn't look like a rosy future at Kroger. And that, when you say that, the stock takes a hit. It's down nearly 9%. American Eagle, the retailer, the outfitter, down 6% this morning, taking it on the chin. Better sales at the discounter, Burlington stores, and that's going exactly the other way. That is up 7%. Lots of volatility in the retail sector today. U.S. Steel says it's going to put about 500 workers back on the job. This has got to be because of tariffs.
It certainly is. It's the Granite City factory in Illinois. This is actually a blast furnace. They've had 2 idled there going back to to 2015 because of steel and the battle against cheap steel coming in from places like China. They say roughly 500 workers are going to be back on the job, and they say it immediately, says their union leader, we've seen some of the biggest smiles on the faces of these workers. It's so much of a relief for them and their families, and it's all down to President Trump.
All right, Amazon, Amazon, Amazon. Yes, we've got that story for you. Another one. The investment firm Bain says Amazon could become the third biggest bank if it wants to. It says Amazon's banking services could grow to more than 70 million consumer relationships in the next 5 years. It would therefore rival like Wells Fargo.
Yeah,
you don't see it.
I'm not buying it. I mean, this is all on the news that Amazon is said to be in talks to work on a checking account offer from JPMorgan Chase. Amazon has not even made a formal announcement about that. For that number to be reached, to be a Wells Fargo type bank, it would have to sign up more than 75% of their existing Prime members into checking. And I just don't see it.
I agree with Lizzie.
You agree?
No, it's absolute rubbish. Do you know how hard it is to change your bank account when you have all your standing orders, all your prearranged, payments made? It's an absolute nightmare to undo everything and then take your account somewhere else. Forget it.
That's a good point.
I see it as a negotiating ploy. Remember, Amazon pays about $250 million a year in interchange fees for credit card use. Now, this threat can be used in order to push that down. And they also have to be careful what they wish for. GE Finance was in banking. Wells Fargo's had some troubles here. It's not an easy business.
It's overregulated.
I don't see the high-end customers wanting to talk with Alexa about their next mortgage.
Online banking,
hold on.
online
Scott,
with the banker never took off.
Almost out of time, but Scott Martin, last word to you. Will Amazon successfully get into the banking business, retail banking?
I sure hope they don't, Stuart, because we own the stock and we own it for the retail side, not for the banking stuff that they're hoping to do, maybe.
Well, that was interesting.
Stick with their knitting.
10 seconds, just like that. Real tight little soundbite there from Scott Martin. It's great to be back. It really is.
Welcome back.
It's that time, though, when we say, Scott, thank you very much indeed. David Dietz, thank you, sir. Gentlemen, one and all, thanks very much.